Please remember, all information provided is considered public knowledge and is in no way, shape, or form intended to be financial advice. The markets of cryptocurrency are considered volatile. I recommend you do your own research on any project that you're looking to invest in. Hello, and welcome. You likely found this video while trying to learn about Defira. When discussing Defira, first we have to look at its origin, starting with Tranquil Finance. So what is Tranquil Finance? According to their Gitbook docs, Tranquil Finance is a multi-primitive DeFi super app for the Harmony blockchain. Continuing, the protocol supports three major DeFi primitives: DEX, DEX, lending, and liquid staking. Some of these terms can get a little confusing, such as DeFi, a shorthand for decentralized finance. So for context, a bank is a central location where depositors can deposit and withdraw their assets, sometimes earning returns like in a high-yield savings account. A bank can take your and other parties' deposits and invest them, securing a return that they then distribute as interest. The idea behind decentralized finance is that it removes the middleman, allowing depositors to deposit, withdraw, and earn through interacting with each other using smart contracts on a blockchain. Let's use a quick example. If person A deposits $10,000 into their account, the bank can then lend person B that $10,000 at an interest rate of, let's say, 10%. The bank takes that $1,000 of earned interest, 10% of $10,000, and distributes a portion to person A, usually at a rate of less than 1%. The middleman, the bank, is taking 90% of the earned interest as their fee or cut of the transaction. Person A earns $100, while person B pays $1,000 in interest. If person B defaults on their loan, the bank is left holding the bag, which could force them to shut down. It would leave person A unable to withdraw their deposited amount. However, most banks have insurance and systems in place so that person A will still be able to recover their deposit. Through smart contracts, person A could deposit $10,000 into a lending protocol like Tranquil Finance. Person B can then borrow that $10,000 against their collateral at an interest rate of 5%. The established smart contract takes a smaller fee, think 3% versus the 90% with the bank, and distributes the rest to person A. But wait, there's more. Lending protocols often have their own native token to then distribute as a bonus reward for using their platform. This allows both person A and person B to earn rewards from depositing and borrowing on the platform. Person A earns 5% or $500, and person B pays 3% or $300. The difference of $200 is made up through the issuance of the platform's native token. So let's go back to Tranquil Finance. Let's see what they meant by lending. According to their docs, Tranquil lending is a money market that allows users to supply and borrow assets, while receiving or paying interest in a completely permissionless and decentralized way. Borrowing and lending interests are set based on market demand, and loans over-collateralized to ensure solvency. What that indicates to me is that person A doesn't bear that traditional risk of losing the $10,000. The platform is not at risk of holding the bag because person B's collateral will be liquidated or taken through the smart contract. In order to be transparent, Tranquil Finance continues. Smart contracts are forked from Compound, and the core controller and market contracts have been audited by Certic, or Certic, depending on how you read it. In case you want to dive deeper into these topics, YouTube creators have provided tons of content that go more in depth on DeFi and blockchain lending protocols. Let's take a look at another part of their platform, liquid staking. The team describes their liquid staking through their token ST1. Our liquid staking token, ST1, which allows the user to take one for rewards while also being able to use it in Harmony's DeFi ecosystem, such as using it as collateral on the Tranquil lending. We envision ST1 becoming the currency of choice in Harmony, as one naturally loses value due to inflation if it is not staked. So normally you have a token to earn rewards collected from trading fees. Platforms have typically required a locking period ranging from 1 day to 1 year, meaning if the price drops or another opportunity arises, you can't access your assets. Liquid staking takes away the locking period by issuing another asset that is fully backed by the original. This creates the ability to exchange or withdraw the staked amount in a fluid manner, hence liquid staking. A user takes their asset, such as Harmony 1 token, and locks it in on Tranquil Finance in exchange for ST1. To keep it simple, you let the exchange use your crypto token to help processes in exchange for rewards or interest. and at any time you can trade the ST1 back to the original Harmony 1. Last but not least is the DEX or DEX. In crypto, DEX stands for the Decentralized Exchange, and Tranquil Swap is a Tranquil version of a DEX. This is the feature that Tranquil team used to launch Defira, and currently is available through the game or app page of Defira. The Decentralized Exchange allows users to trade tokens in a permissionless fashion. There are two costs associated with trading crypto tokens on a decentralized exchange: the gas fees for whichever network you're trading on. For Tranquil, this is the Harmony 1 blockchain, that network, which uses its charred feature, allowing for very low gas fees, often less than half a cent. The other cost is the liquidity provider fee, where a portion of each trade goes to liquidity providers and the protocol. This fee has typically been around 0.3% or 0.3%. Again, that is super low compared to legacy currency exchange protocols, banks. For example, if you've ever tried to exchange one fiat currency for another, you know that the fees can range from 5% at a credit union to even 10% when trying to use a credit card. With each DEX, the fee can vary, but often can be as low as or lower than 1/3%, a savings potential of 99% in fees. That is an overview of Tranquil Finance. Next, we need to look at the protocol token, Tranq. Referring back to the doc, the team describes the token as follows. Along with governance rights, 75% of the protocol fees will be distributed in the locked staking pool. As part of the Defiraverse, Tranq will also have additional utility as an in-game resource, including the cost to wish for new heroes. Tranq consumed this way will be permanently burnt. So, looking at Tranq, it's going to serve as a governance token, distribute rewards to those that stake it, and have in-game utility. That can add additional value to Tranq with both the Tranquil Finance and Defira universe. Some of the Tranquil Finance developers, and by proxy, Defira, are known simply by their handle names: Yamcha, Goten, Krillin. The team has developed a community around the project that is in the thousands, and has rivaled its predecessor in total value locked on the Harmony blockchain in as little as 4 months. Both of these are huge milestones, as well as the accomplishments that have been reached on their roadmap, almost all coming in the Q4 of 2021. Since then, the platform has continued to thrive despite the volatile market that is crypto trading. To better understand the quintessential link between Tranquil and Defira, their vision statement says it all. It reads, "Our vision for Tranquil Finance is to be the premier platform on Harmony for every major DeFi primitive. As part of the Defiraverse, Tranquil Finance will become part of a fantasy game world, in which the DeFi and GameFi models used to create something much greater." Alright, so not only is Tranquil Finance looking to be a platform on their hybrid DeFi GameFi creation of Defira, but a premier platform for the Harmony network. To learn more about Tranquil Finance, you can visit docs.tranquil.finance. And stay tuned for more videos on Defira and the GameFi metaverse.